Okay, let's get on with the conversation around financial technology. It's going to be a very busy week with outlook on the Nigerian economy for 2018. A number of research reports are already on the street on where we're going in the new year. But financial technology, as you heard last week, is also part of the conversation for this week. And we'll need to put this also into what we are looking at. So let's talk. Let's get Isalade, who is a partner at Banwo and Igodalo, to talk to us here live here in the studios on financial technology and, more important, the regulatory aspects of this. This is very important. You put technology out there, but you need to put very strong regulation behind it so that everyone behave themselves within that space. Good morning. It's good to have you.
Good morning.
Thanks for coming. Give us the what and the why of regulatory issues in financial technology.
Thank you very much. As you are probably aware, financial technology is very much apparent in our ecosystem at the moment. A lot of companies definitely rely on fintech, and even on an individual basis, you also have to, one way or the other, rely on financial technology for you to be able to provide services or even do things that are related to you on a personal level. Because of this extensive reliance on financial technology, the government, the need for regulation becomes very key. This is because, as you probably imagine, a lot of our financial transactions in the world today are being done through financial technology platform, through your phone, so that you can transfer money on your phone. You go onto the internet, your bank platform, you transfer funds from there. So there is a need for government to then regulate this particular sector in order to ensure that the interests of the consumers are protected. On the other hand, is that there are companies who actually then provide such financial technology services. And there's a need to create an enabling framework that allow them to be able to compete effectively with the other traditional banks. There are a lot of financial technology out there that are being provided, services are being provided by the non-traditional banks. Remita is one example. We're probably aware of this issue we had with the federal government when they started the Treasury Single Account System. That was that's an example of
that's
financial
technology. That's a fintech. TSA is a fintech issue.
It's purely a fintech issue. It was the federal government deploying financial technology to aid accounting and financial system by ministries and other government agencies. And so, if such a service, if such a requirement, if such a service is being provided by regular banks, it's already stifles, it makes it difficult for smaller companies who also have the capacity to operate in that space. So regulation is actually on both sides. First is to ensure that the interests of consumers are protected in terms of our continuous reliance on fintech products. On the other hand, is that for even companies operating in this space, there is a need for government to create an enabling environment for them to be able to provide the services effectively and in a manner that protects the interests of the consumers.
We have, in other words, we have a financial ecosystem that has changed. So even though we say it's fintech, which is financial technology, it has brought finance into technology and vice versa. So there's a handshake here. And there's a different architecture and personalities and firms involved. And it's very good. I know those of you who are in the legal practice want to be part of all of this to make sure that to make sure that everybody behaves themselves and within the ambit of the law. That's why regulation is important here.
Definitely, that is one key reason why regulation is important. And also flowing from that is the fact that there continues to be fintech, because it's a moving train. It's very fast. A fintech product that is useful today is no longer relevant tomorrow. Now, one of the challenges our regulators have then had to deal with is to be able to catch up. They are more reactionary in terms of how they deal with this product. And therefore, you find a situation where most of our laws, as you currently even have it, do not provide enough room for some of these fintech products to be efficiently deployed, even to the protection of consumers. We're all familiar about the Wonder Banks, the MMM. Those are kind of some form of fintech being deployed in order for people to be able to access some form of financial services. But because it wasn't properly, first, the regulatory framework appeared, does not capture it, and therefore there was the people still wanted to use those products, but there was no enabling regulatory framework to actually protect them. So one of the things we do as lawyers is to work through the FinTech Association of Nigeria, is to work with the various regulators. You have the CBN, you have the NICOM, you have the NSE, you have even the Corporate Affairs Commission, to ensure that some of the laws that currently makes it difficult for some of these fintech products to be provided to consumers in a safe and efficient manner are then provided with specific regulatory framework that is not too burdensome on the products providers, but still ensures protection for the average Nigerian, which is the problem we have. If you ask a regular small fintech company to comply, that really should be a bank. If you look at the strict wordings of Nigerian law, some of these fintech products are actually, could only be done by a bank. But look at the capital requirements for a bank. Billions, you have to provide, have billions. But these are companies...
But I'm not a deposit money bank.
Exactly.